So we had quite the eventful day today with Fomc. As you can see here, we actually fell back below the pennant resistance. This is the one that I was referring to in our weekly prep on Sunday. And I did mention how we would probably make some form of a higher high come early this week, which was the case over here. However, we were unable to cross above the high from February 2nd, which was a keynote that I made in that last video, which if you are new here, by the way, do subscribe below. I make these videos every Wednesday and Sunday, but we were unable to get above this high that we made over here on February 2nd. So you can see we had a rejection and then a hard rejection afterwards that sold off to close the daily back within the pennant formation. And then today retested above it, but it was unable to hold. So far we've had a pretty substantial rejection to the downside. But what's interesting about this scenario is, first of all, looking at the technicals, at least to start off this week, seems relatively bearish because as of now, this is a fake breakout of this pennant pattern. I remember the pennant pattern here is the two red lines. We have the support as well as the resistance up here. And so far we had this break over here, but it was unable to hold above. So we will have to get weekly confirmation to, again, confirm that we actually fell back within it. But something that makes this scenario very interesting is today is a key reversal date. And I mentioned that in our Sunday video. Is it part of the 18-day reversal? So as you can see from this chart over here, this is a part of the 18-day reversal cycle. And I know if you guys are familiar with the channel, you know how this works. Whatever momentum we see going into the date, for example, back here on March 13th, we had momentum going down into this date. Whatever the momentum is going into that date, it will reverse to the opposite side out of it. So because we were going down into it, it prompted a reversal to the upside. The same exact scenario can be applied to any of these dates over here. We were going up into this specific date of October 31st, which prompted a rejection to the downside afterwards. And typically you'll see a reversal for at least 3 days before it goes and decides where it wants to go after that. But as you can see over here, it was 3 days to the downside. And if you go back, you'll notice that it works every single time. And sometimes it is a day or so early, like over here was a day early, followed by one more day to the upside, but then a hard rejection afterwards. So for the most part, it's been very consistent throughout the past year, especially throughout this bear market. So we are within this state today, which again makes a very interesting case for the market because again, as of now, the technicals are looking relatively bearish off of a potential fake breakout scenario. However, again, we are within that reversal date, which should prompt upwards price action into the end of the week. So what I'm watching for, at least for a possible trade setup, is on this chart over here. We actually fell quite a bit after hours on the S&P 500. So it's going to be interesting to see if we actually fill this gap over here on SPX starting tomorrow or Friday. But what I'm watching for, especially with the weakness from after hours, if we're able to get back up, firstly above this 4100 level over here, because this is a key demand range. As you can see, we've bounced off of it before, as well as back over here. And it's also acted as a resistance, as you can see on numerous times before. But regardless, if we're able to get back up above this level, and especially back above 4,120 to 4,130, I have this as a key range. It acted as consolidation today, but if we're able to get back above that range, then that would leave for a lot more upside. And that would mean that the reversal cycle remains true. And we would see upside for at least 3 days, which would bring us until Monday of next week. So again, it is a bit iffy having a reversal date cycle the same day as a key event like FOMC. So that can change up things. But again, like I just showed you before, it's had tremendous consistency, at least this reversal cycle. So if we do see a break back above, again, first 4,100, but then especially over 4,120, and that means that that reversal cycle is in play and we would likely continue to the upside. Another notable level to pay attention to, I guess, or levels here would be one, this gray trend line over here, and then two, this white box. So what are both of these? First, I'll go over the white box. The box is a key supply zone that we've rejected from previously all the way back here in the middle of February / early February. It was a key supply zone, active supply zone. You can see here we rejected numerous times, and it also is acting as a supply zone right now. You can see we rejected right off the lower end of it over here on April 18th, and we also rejected off of it recently on Monday of this week, actually, for May 1st. So we know that this is a key supply zone and there are sellers up here. That's evident just based on the rejection we had, but it's also evident based on the dark pool levels feature. You can see over here, we've seen a lot of premium in this range. If you go back here to Tuesday, actually, you can see that we had 4.5 billion in premium at the 415.66 level. That is a lot of premium. Very, very rare to see over 4 billion in a day for signature dark pool prints. So this is a massive print. And as of now, it seems like it is a very large seller. I was talking about the distribution we've been seeing so far in our previous video on Sunday. And I'll actually show you right here on the 15-minute chart. This is a characteristic, at least this price action right here. This is a characteristic of distribution. We saw two large signature dark pool prints between both of these days, on top of the fact that we had the gap down price action followed by a slow grind up, followed by down, and then a grind up, and then down. And you can see here, this is just classic distribution in a consolidation phase before a lower price discovery. However, we had this big rally for only 2 days to end last week, which might have made it seem like this wasn't distribution. However, I still believe that it was a distribution phase. At least institutions were selling on the way up, and it still seems that was the case, as this is a key range that acted as resistance actually today, because in the 412s we saw a lot of those prints, and now we know that in the 415s we also had a very substantial print, which is right smack in the middle of this supply zone here on SPX. So we know that sellers are present up here, like I said before, and we also know that this gray trend line right here, if you go back to the daily chart, actually go back quite a bit, all the way to 2018. This is where I started this trend line over here. It's at the 2018 high pivot, or at least the high before this substantial correction here in early 2018. And you can drag it across. You can see over here that it was respected. It actually was the support right before the big 2020 crash that we saw over here. And as you go across, you can see that it was respected throughout this bear market so far. It's acted as a key resistance as well as support. Over here, acted as support. You can see by the wicks of the daily candles, and then also a resistance for numerous days over here. We actually had a fake breakout over here in February, followed by some more downside, but recently we retested it again and it's been unable to stay above. So having a key supply zone paired with a critical trend line means that there's a very hard resistance up here. So bulls definitely want to get above this level, specifically around this 4,160 to roughly 4,200-ish level if they want to have a lot more upside. Otherwise, there's going to be a lot of sellers present up here and you're going to see hard rejections like we've seen so far. I also want to mention QQQ here. You can see based on this ascending pattern I've shown before, we've been consolidating above the pattern lately. We actually had a double top, which is followed by downside, but due to tech earnings, we saw a very substantial rush up to close back above the ascending pattern. So tech was able to maintain the weekly close above this level. And again, I'd like to see how the weekly plays out here based on Friday's close. If we actually close back within the ascending pattern, that would make all of this similar to SPY, a fake breakout. Otherwise, as of now, it is retesting this trend line on the weekly, and there's still potential that it could bounce, especially with that reversal date being today on SPY. So again, I'd like to see for that weekly confirmation, but so far having a close back within this channel, you do have to be careful here because there is potential for more sell pressure. So this is what I'm watching on QQQ. Additionally, we're starting to see some signs of life on the VIX. We did bounce off of this yellow trend line as of this week. And if you go back over here to the weekly chart, I mentioned this also in the Sunday video, we had a weekly close from last week right below this line, but I said I'd like to see how FOMC week plays out because with the VIX, you need a lot of confirmation. It's not the same as a weekly close on an individual ticker. I'd like to see at least 2 weekly closes for that confirmation. And so far, we've actually bounced this week and are above the yellow trend line. So if we were to close back above this yellow trend line, there is potential for more volatility heading forward from here. So this is very key to note. Also, this trend line starts all the way back here in 2017 if you'd like to add it to your charts. This is a very critical trend line because again, if we did have that confirmation, especially for 2 weeks under this level, that could mean a lot more downside for volatility, which of course would mean less downside potential for the S&P 500. So as of now, looking promising in terms of a bounce. I would like to see a close above this yellow trend line to end the week for some more bearish emphasis into the rest of May. So make sure to watch where SPX closes on the weekly candle in 2 days coming up here on Friday. Again, very critical. If we close back below this red trend line, that would make all of this a fake breakout from last week, which of course would be very bearish. So I am watching. The next 2 days are very crucial, and also make sure you pay attention to the levels I provided on SPX as well from over here. Remember, 4,100 very key if we're able to reclaim again, but especially 4,120. As you can see here on the 50-minute chart, that would leave a lot more bullish emphasis to at least a retest of around this trend line over here from the 2018 high as well as the supply zone. So watch those levels going forward. And other than that, appreciate you guys watching the video, and I'll see you guys next time on Sunday.